Hey everyone, welcome back to Corporate Decoder, the place where we take a deep dive into the financial world and unearth the hidden stories behind the numbers. Today we're looking at Fidelity California Municipal Trust II's latest filing, which essentially breaks down their financial status as of the 31st of August 2025. It is a bit like looking under the hood of a very specific type of investment fund, and trust me, there are some interesting details here. Before we dive in, if you find value in these deep dives into corporate filings, make sure you hit that subscribe button and notify yourself for new videos. We also have a fantastic community Discord linked in the description below where we discuss these reports and much more. So what is this filing all about? Essentially, it is a certified shareholder report for a registered investment company. Think of it as a very detailed checkup on how this particular fund managed its money over a 6-month period from the 1st of March 2025 to the 31st of August 2025. The fund's main goal is to invest in municipal securities located in California, aiming for tax-exempt income. It is not for everyone, but for the right investor, it serves a purpose. This report breaks down the fund's performance across different classes of shares, like the regular one, the institutional class, and the premium class. The core financials are pretty similar across these classes, reflecting the overall health of the fund. We're going to focus on the key numbers that tell us about its investments, its income, and its overall value. First up, let's talk about cost. For a hypothetical $10,000 investment in the regular class, you would have paid about $21 in cost, which works out to a tiny 0.42%. For the premium class, that cost drops to around $15 or 0.30%, and for the institutional class, it is just $10 or 0.20%. This difference in cost is a common way for fund companies to manage different investor needs, with institutional investors often getting lower fees due to larger investment amounts. Now, for the big picture, as of the 31st of August 2025, the total size of the fund was a substantial $5,631,563,129. That is a lot of money to manage. And what were they investing in? Well, the fund held 403 different investments. That diversification helps spread risk, but also means there is a lot to keep track of. Let's peek into how the fund's assets were structured. A large chunk, 67.3% of the fund's assets, had a very short effective maturity of 1 to 7 days. This is typical for money market funds as they aim for high liquidity and stability. Another significant portion, 13.2%, had a maturity between 31 and 60 days. Looking at the types of investments, tender option bonds made up 33.5% of the fund's assets. Variable rate demand notes, or VRDNs, which are essentially short-term debt instruments that can be redeemed on demand, accounted for 23.3%. Commercial paper, a type of short-term unsecured debt issued by corporations, came in at 19.4%, and traditional municipal securities were 9.4%. The remaining 14.4% was net other assets and liabilities. Essentially, the fund is heavily invested in short-term instruments with a significant portion in these more complex-sounding tender option bonds and VRDNs. Diving into the municipal securities themselves, the fund held a significant amount of California-specific debt. For example, there were many California State Public Works Board lease obligations and various University of California revenue bonds. The total value of these municipal securities was over $533 million. The tender option bond section is particularly detailed, revealing a vast number of these instruments, mostly related to California entities. We're talking about bonds for things like California Community Choice Financing Authority, Clean Energy Projects, and various health facilities financing authorities. The total value here alone for California entities was over $1.87 billion. This shows a strong focus on California municipal debt and various financing authorities within the state. In the variable rate demand note section, again, California dominates. You see a lot of investments related to Bay Area Toll Authority's bridge revenue bonds and California Health Facilities Financing Authority. The fund also holds significant amounts in other states' VRDNs like Florida, Georgia, and Iowa, showing some diversification beyond California. But California is certainly the primary focus. This section alone totals over $1.3 billion. The commercial paper holdings are also quite extensive, with many listed as being supported by Bank of America or other major institutions. This is where the fund invests in short-term debt issued by various Californian entities like the City of Los Angeles and the State of California itself. The total commercial paper holdings were nearly $1.1 billion. Interestingly, a significant portion, 11.7% of the fund's investments, that is over $656 million, as of the 31st of August 2025, was actually in a related Fidelity fund called the Fidelity Municipal Cash Central Fund. This is a common practice where funds within the same family invest in each other. Overall, the fund had about $5.48 billion invested in securities, representing 97.3% of its total assets. That leaves a small but manageable portion in net other assets and liabilities. Looking at the statement of assets and liabilities as of the 31st August 2025, the total assets were over $5.66 billion. Liabilities were much smaller at around $31.8 million. This healthy ratio shows the fund is well capitalized. The net assets consisted of $5.631 billion in paid-in capital, and a very small amount in total accumulated earnings, a testament to its money market nature. The net asset value per S-share for all classes was exactly 1.00. This stability is a hallmark of money market funds, where the goal is to maintain a constant share price even as the underlying investments fluctuate slightly in yield. The total return for the 6-month period was around 1.10% for the regular class, which is modest but in line with money market expectations. For the institutional and premium classes, the performance was slightly better, with total returns hitting 1.21 and 1.16% respectively, reflecting their slightly lower expense ratios. On the income side, for the 6 months ended the 31st of August 2025, the fund generated over $73.5 million in total income, primarily from interest. Expenses were around $6.6 million after some reductions. This resulted in a net investment income of over $66.9 million. When it comes to realized gains and losses, the numbers are surprisingly small. Net realized gain on investment securities from unaffiliated issuers was just a little over $10,000, and that is pretty much it for realized gains. This tells us the fund is not actively trading its holdings for profit, but rather aiming for steady income and capital preservation. Looking at the changes in net assets, the fund saw an increase of about $12.9 million over the 6-month period, driven by operations. They also distributed over $66.9 million to shareholders, which is normal as money market funds typically return their earnings. The financial highlights section further reinforces the stability. The net investment income per S-share was a fraction over 0.011 for the 6-month period. The total return for the period was just over 1.10%. The expenses before and after reductions were reported at 0.42%, which is a moderate expense ratio for a money market fund. This note on expense ratios is important. It tells us that the stated expense ratios can be lower than what is actually paid due to fee waivers or reimbursements from the investment advisor. This is a common practice to keep headline expense ratios attractive. The report states that all investments are categorized as level 2 under the fair value hierarchy. Briefly, this means their value is determined using observable inputs other than just direct market prices. For money market funds, this typically involves valuing securities at amortized cost, which is their original cost adjusted for any premium or discount to face value over time. This method is used because these securities are generally high quality and liquid. Under organization, the Fidelity California Municipal Money Market Fund is a part of the Fidelity California Municipal Trust there, and its primary focus is on California municipal securities, aiming for tax-exempt income. The fund offers different share classes to cater to various investors, though retail investors are the primary audience for the main class. We also see a mention of Fidelity Central Funds. These are essentially internal funds that Fidelity manages for its own investment companies. While the fund doesn't list the underlying holdings of these central funds, it does state that it indirectly bears a proportionate share of their expenses. The objective of these central funds is to provide a high level of current income with capital preservation and liquidity consistent with short-term investments. Now, for my take on this, Fidelity California Municipal Trust 2 appears to be operating exactly as intended. It is a stable money market fund focused heavily on California municipal debt. The diversification across a large number of holdings in both traditional municipal securities and more complex instruments like tender option bonds and VRDNs is significant. The fund size is substantial, and its liabilities are well managed, suggesting financial stability. The low expense ratios, particularly for the institutional and premium classes, are attractive for larger investors. The near-zero realized gains and losses point to a conservative investment strategy focused on income generation and capital preservation rather than aggressive trading. The primary risk here, as with any money market fund, is the overall economic health of California and its ability to meet its debt obligations. Also, the reliance on tender option bonds and VRDNs, while common in money markets, introduces complexity and requires careful management. For its specific objective of providing tax-exempt income from California municipal money market instruments, this fund seems to be executing its strategy effectively. So that is our deep dive into the Fidelity California Municipal Trust, the second shareholder report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.